Hello guys, welcome back to the channel. Welcome back to the video. It's another day of the Alchemist Strategy. So people have been asking me about signals that, oh guys, give me the Alchemist signal. Today I got you covered. So I'm going to be analyzing three videos, three pairs for you, and then I'll be giving you two signals, and then another one is also going to be a signal, but that one we have to wait going into next week, probably around Tuesday or Wednesday. We can be executing it if it plays according to our analysis. So stick around. You're going to be getting huge benefits from this video. You're going to be getting to study how to apply the alchemy strategy, all the steps that are involved, and then also going away with a signal for next week. So today is a Saturday. The market is closed. However, this is the analysis that we're going to be expecting going into next week. For NZD card, this is a trade that we've been having on the charts for long. I think I gave you out this signal. I marked the thing sometime back. There's a break of structure here. Look at this huge movement to the downside. So price was around here. It has been ranging. Even here, I told you, you can check the previous videos, told you price is going to come back up here and then drop it. The orders didn't drop, it is now dropping. However, we are just going to go, this is the first signal I'll give you. We are just going to go through the process how we arrived at that point. So as I told you, I'm a swing trader, and I mainly do trade on the high time frame, that is weekly, daily, 4 hour. However, this strategy can also work on the lower time frames. Now I'm not going to be like some of those videos you see on YouTube whereby people tell you in an uptrend we buy, in a downtrend we sell, but they don't tell you exactly how they do that. I'm going to be giving you exactly step by step how you can do that. So without further ado, let's drop down to the video. However guys, you have to subscribe to the channel. We're on the road to 700 subscribers. Subscribe and be part of this growing community. I promised you when we reach 1000 subscribers, I'm going to be opening a Telegram channel. I first give you guys free trades like for 2 months, free signals for 2 months, and then from there you guys can now start trading on your own. So subscribe, let's reach to that milestone. So let's go down to the video. So this is NZD card. Let me just remove everything from the screen such that when I reach there, you can know how we reached there. You remember the other candlestick pattern I told you, the evening star? This is a candle that is going up and then a rejection candle. Remember, this is a weekly rejection candle, and then a candle that drops down, forming an evening star. And it is always best when this candle is an engulfing candle. This same pattern has happened on US oil. If you go and check on US oil weekly time frame, you'll see the same pattern. So we have a candle that is going up, and then we have an indecision candle, and then we have an engulfing candle that engulfs both these two. So this is an evening star. In most cases, it shows reversals, especially if it happens at a place of support and resistance, supply and demand. It shows a reversal. So this is a sign that we might be heading down. However, how do we now head down from here? Simple. You come and mark our indecision candle from its closing price. Mark it from its closing price like that. Today, I mark the opening, like I mark where it is logical. You don't have, I don't want big stop losses, so I mark where it is logical. I can mark a closing price to the high this last candle reached, or if this one is not there, I can mark to this high on the middle of it. Anyway, as long as it is logical. But the key thing is that you have to mark this indecision candle. So after marking it, you'll have to now to drop to the lower time frames and refine. Now I'll just mark like usual. I'll just mark this candle. Why am I marking this candle, not this one? Because after this candle formation, the way closed from here. So the opening wick that we wanted to trade was this one here. So we open from here. So I'll just put this line to show us where the wick opened from. Okay, so now after doing that, you're going to drop down to the lower time frame, let's say the daily, and refine your zone. So when you drop down to the daily, you see a very good thing. What do you see? You see that price was dropping, it made a drop, a base, a drop. This huge Marabozu engulfing candle broke this previous structure here. This is the previous low that price had reached. This huge candle broke and closed below with a lot of force. That simply shows you that there is a lot of sell momentum at that zone, at this zone here. So now you want to refine to the clarity of that zone. This is how you get it. That is now how you get it on the daily time frame. That is how it looks like. And the week was the second week that wanted trade was opening from here. So what do? We are going to continue to the 4-hour to get the tightest refine we can get, though we don't want to refine it harder, because that means then you might miss out on the trade because you refine it lower. So now if you come to the 4-hour, this is what you get. This is what you get on the 4-hour. Let me see if I can adjust to that. Yes, this is what you get on the 4-hour. And look at the zone, guys. There is no clean zone that you're going to get as this one. Look at the precision, guys. Look at the precision. And when you look at the risk to reward, it is so unbelievable. Look at the risk to reward. You're literally going to risk 17 pips, and by now you would be in a 1:1. Already have brought back your risk, and now you're going to be waiting for price to drop up to here. That is 1:5. Price to drop up to there, 1:5. But remember, price opened here Monday, then the whole week we finished it ranging, but we were not bothered because we knew it would come and pick our order. So when the next week opened on Monday, it started ranging and went up. By Friday it was already going up, went up to pick our orders from this area, picked our orders, and immediately it tapped into the zone. It turned around. So that candle closed below the closing price of the opening price of the previous candle. However, it reached the lowest low that candle reached. So what is going to be your signal on this one? Your signal is going to be very simple. Wait for the market to open on a Monday or Sunday evening, and then drop down to the lowest time frame that you can. That, I think that one will be the 15 minutes. Go to the 15 minutes and look for demand zones to supply zones to sell from. You see, this was a demand zone that was respected very well. Price bought the upside. However, price came back and violated this demand zone. You see, tried to react from it, but it violated it and dropped to the downside, closing below this demand zone, meaning that we are going to the downside. So you're just going to look for supply zones around this area. Price might come to test a little bit and sell. You're looking for supply zones around this area. So I think 15 minutes would be okay, but I don't see any zone on the 15 minutes. Let me try the 30. Yes, on the 30 the zone is there. 30 the zone is there, very clear and straight forward. So what do? You'll mark your zone like this on the 30 minutes time frame. I think you'll just mark that full candle because you want to include this week here. So you'll wait for price to open on Monday, come and tap into your zone, and then drop you to the downside. So that is the signal that I've given you. You can either put your buy, your sell limits there. However, if you put your sell limits there, I would encourage you to risk 17 pips like we did on the first one, because price might want to use this supply zone. Though it is not a good one, but price might want to test there and then target the downside. You will still get good premium pips. So that is one signal that I've given you. You can look out for that signal on your charts, and then you will be getting some profits. I expect NZD card to sell into next week. So that is all for NZD card. I'll be proceeding to another pair for that matter with the same strategy. So NZD card, I had also USD card. So USD card, it is still the same thing like NZD card, but let's start from the weekly time frame. I'll also delete just everything from the chart. Oh, one thing I forgot to show you. Okay, I'll show you on USD card. So I want you guys to observe something. You remember the candlestick pattern I told you, the evening star, where you have one candle going up, then an incision candle, and then an engulfing candle. It is the same thing that has happened here, guys. This one was going up, then rejected to the upside, then gave us an evening star. So what do? Mark the indecision candle. Mark the indecision candle. Now this one I've marked whole of it, but I'll refine for you and show you. So this one I mark the closing price there, and then the high the previous candle reached. That is how I mark my candle. Like I just mark where it makes logic. So like that. And now which candle are we trading? It is this one here, because this is the set of the three candles: up indecision, down engulfing candle. The things always happen. It also happened here. It happened here, but this one, it is a 50% candle, indecision candle, and then up candle. This one came like to retest, but it was so tight. Then however it went up, so you just have to observe it. So now when you come back to this one, you drop down to the, remember this blue line is marking the candle that is of the week that we are going to trade in after the closure of this engulfing candle. So you go back to the daily. What do you see in the daily, guys? You have, now this is very even more clear. You have a formation of the other candle on the weekly. On the daily, you have a pattern that has not yet happened, but I know it is one that wanted to happen. Like this is a high, a low, a high, a lower. This one wanted to see to form a lower low. However, it formed an equal low. And also where we marked our zone, there is a supply zone, a clean supply zone where we marked our zone. So when I refine my supply zone like this, what do you see? You see, first of all, a head and shoulder on the daily time frame, because this is a shoulder, this is a head, this is becoming another shoulder at a supply zone. That is the daily time frame. Remember, price is already here. This week has not yet opened. Price is here, so we are expecting this week to open and then go test into our zone, then drop. That is what we expect. So after defining that on the daily, it has even given me more confidence because I'm at a place of a head and shoulder, so we are likely to drop. So I'll proceed to the 4 hour. You see this alchemy strategy, guys, how it is beautiful and easy to trade. So when I proceed to this 4 hour, what do I see? I see that same pattern, but I can refine it to here. This one you could even refine it to here, like that. You see that same pattern? 4 hour, I refine it like that. Now on the 4 hour, the pattern is very clear: high, low, higher, high, high, low, higher, high, lower, low. Breaking this low to form a lower low. So that is the QM pattern. Where do you buy from? One, we have this area here, and then we have another area here. However, since price is in the downtrend, and this is the weekly zone, same as the daily zone and the 4 hour zone, this is where we are selling from. So price tapped in, reacted up to here, and then came back, reacting to the zone. Look at that huge rejection. So I still expect this price action to drop even further. Where is it going to drop up to? We shall get that on the daily time frame. Where is price going to drop up to first? This level here. Let me put my line. This level here. That is where price is going to drop up to first. So I come to my 4 hour and look for entries that are going to take me to that daily target. So now this is the 4 hour. price is already in play. So people who have big accounts, this is another signal. You can enter from here, put your stop losses above here. People have big accounts. If you don't have a big account, you're going to wait for price action to retrace, go down to the lower time frame like the 15 or 30 minutes, and then so the risk to reward is 1:5, target is 120 pips. That's the first level target. However, people who have small accounts, what you're going to do is you're going to wait for the market to open, drop down to the 5 minutes time frame, 15 minutes time frame, like that. But then for you, it's going to be hard because you haven't broken this low. So you'll have to wait for a break of this low, and then retracing into the supply zone. I don't know if the 30 minutes is clear. 30 minutes is not also clear. This is a demand zone on the 30 minutes, and this is a break of structure. So I expect a reaction from this zone and then come and either test from here or the 30 minutes or the 30 or the 15 minutes. So this one here, drop, base, drop. So I expect price to retest from this zone and drop. So people in the 30 minutes wait for price to react from here, come here, and then drop down. Either way, price is going to sell for USD cut. But I think you can see with the Alchemist, what we have done is that we come from the weekly, identify the pattern, then on the daily refine the areas with the supply and zone. The daily zone, it's better if it is in the same area with the weekly zone. Then after you drop down to the 4-hour, refine it even more. You can even go up to the 1 hour, but I don't like to go to the 1 hour because if you go to the 1 hour, chances are high that you'll miss out on the trade. If you come to the 1 hour, the refinement would be there. That will be the 1 hour. And now there is something I wanted you to see, guys. This, I put here my RSI, and people have been laughing why I put my indicator on the screen. So you see this is a higher high, a higher low, a higher high. Yet the RSI is printing a higher high and a lower high. So this is a signal that we are dropping. Even here, there is a higher high, RSI, higher high, lower high. Signal that this move has lost momentum and we are likely to drop. So we dropped up to here, came back, and now even this one still showing a lower high. That means we are still likely to drop. And with this 4-hour or this 1 hour engulfing candle, engulfed 1, 2, 3, 4, engulfed 4 1 hour candle shows that we have a lot of sell momentum in that area. So you can just mark this area for the 1 hour. I think that one is going to be good. Just put your entries. Price might want to retrace a little bit here and then drop. I hope we are together up to that area. So Alchemist is all about precision, small stop losses with high risk to reward or high profit margin. So that is all, guys. I'll proceed to the last pair with this strategy, that is US oil, and this one is now yet to happen. So be attentive on this one because this one is even more clear, and I know this one is happening the coming week. So let's proceed. What do you see on US oil? You see the candlestick pattern that I've been telling you. You see a green candle, an indecision candle, and then an engulfing bearish candle. This candle, you see, it engulfs both this candle and this one. That's an engulfing bearish candle. On the weekly time frame, it shows you that the sellers are much in control. So now what do we do? This one is even the perfect example because it has not yet happened. So we're analyzing this market before it even happens. Now identify the trend of the market. What is the trend? We are in a downtrend. Lower lows, lower highs, lower low, lower high, lower low, lower high. We are coming in likely to put in a lower low or an equal low, but at least what I know, we are likely to come up to this zone here. So how do we get to this zone? That is the question. So me, after this formation of this candlestick pattern, that is a confirmation that we are turning around. Guys, for me, that is a confirmation that we are turning around. And this is also happening at a place of supply and demand. This is a supply zone. This is a previous supply zone. If you can see it very well, This is a supply zone, a drop, a base, a drop, breaking this previous structure. So meaning that we are likely to drop even more. We reacted from this previous demand, weekly demand zone, reacted on it, formed a pin bar, and then went up to there, up to when we have touched this supply zone, and now we are likely to drop even more. So what do? Simple. We are going to mark our indecision candle. Be careful on this, guys. Mark our indecision candle like this. After I've marked our indecision candle, what do we want to do next? We want to go down to the daily time frame or the lower time frame to try and refine this price action to the lower time frame. So now what we want to do is drop down to the daily. When you drop down to the daily, this is what you're going to see. This is what you're going to see on the daily time frame. So you want to refine the zone. Now this one is a little bit tricky. We have a high, a low, a higher high, and a lower high. So our entry ideally should be from this candle here. This candle here. So this is a QM pattern. This is a high, a low, a higher high, and a lower low, breaking this structure here. So now our entry should be around this candle. Others say you enter from the wick of this candle to the from the wick of this candle to the wick of that candle. However, what I'm saying is we have a demand zone, a supply zone here, and we have another one, a likely supply zone here. So now which one is going to be true? We are going to drop down to the lower time frames. So this one for hour, we want to get the exact zone. So now when you look at this, guys, now this is a little bit tricky. Look at the zone. Look at where the zone is. It is very far. This is a high, a low, a higher high, and a lower low, breaking this low here, breaking a lower low. So now they will have two supply zones. We have this zone here, and the 4 hour have two supply zone. We have this zone here. I'll mark it like that. And then we have the upper zone, this one here. Have this upper zone here. So we have two supply zones. We have this zone and we have another one up here. Which one am I likely to sell from? To be honest with you, this one is the one I'm likely to sell from. Does it mean that it's 100% clear? No, it is not 100%. However, I would risk a little on this area because this is not we have two zones. One is up extreme and one is down. So I would consider this one, but with only 1% of my account. If it doesn't hold, then definitely this one will hold. But I think this one is going to hold since we are continuing a downtrend. We just put in a lower high and then we proceed to make another lower low. So we shall go down to the, I think I'll just mark the whole of this week and then we'll go down to the 1 hour to refine this. So if I drop down to the 1 hour, what do I see? Guys, on the 1 hour there is another, this is what, these are the zones I don't want, but it is okay. It is okay. On the 1 hour it is even more clear now. On 1 hour it is making a lot of sense, guys. I think you can see it. On the 1 hour you can see it. We are clear that we are selling US oil. However, we have two zones. We have this one here, clean zone, and then we have the upper one. So this is how you'll enter this market. This is how you'll enter this fucking market. This is how you're going to enter this market. If this zone fails, you're going to first use this zone here. This is a signal for next week, guys. Be careful. So that one is 50 pips, and then risk to reward is 1:2, 160 pips to the bottom. Then the second zone is the one up here. That is if this one does not hold. The second supply zone is the one up here. The risk for that zone is 40 pips, and then you'll be targeting. Let me just make this one smaller, and then stretch this one like this, and then put this one on the extreme end like that. So the stop loss is around 40 pips for that one. Like that, and then the risk to reward is even higher here, and that is 1:9. That is 1:9. This one is 1:40. This one is 1:1 is around 1:3. 1:3. Clock 3. 1:3, 160 pips. This is 380 pips. However, that is not even the target. The target is here on the, where is it? It is very far. It is even scaring, and that is if you're willing to hold for longer. So we shall get, for this one 1:4, for this one 1:2. Definitely US oil. I'm entering AUD, USD, and US oil next week. They are my trades. This one is 1:11. This one is 1:4. You see the risk to reward of this pair. This is why we want the alchemy strategy, because it's going to give you low stop losses and high risk to rewards. So I think that is all, guys, for today. I've spent a lot of time on this pair. But I think you have understood the analysis and you know where we are heading. We shall open the market, try to tap into this area and drop, or we shall go all the way up here and then drop. It will depend on what the market want to use as its supply zone. And me, I want to use, I think this one is the best zone I can use. So that is all, guys. That is all for today. Thank you for watching. If you have learned something from the video, kindly subscribe to the channel. Also, don't forget to like the video. If we reach 1,000 subscribers, I'm going to be giving you a free Telegram channel, such that we can do what? We can be getting free signals from there. That is all for the Alchemist Strategy today. I hope you have learned something. Let's meet in another one. Bye.